according to the St.
Mhm.
Louis Fed, credit card delinquencies for lower income households are up over 60% since 2021. Is the American consumer the canary in the coal mine that Washington and Wall Street are ignoring here?
Oh, certainly. And what's really scary is the number of canaries in the coal mine, so to speak. You can look at like commercial real estate. That's another market that I think is a really good example where it is flashing warning signs. The alarm bells are going off, and just so few people are paying attention. And maybe part of the reason for that is because with a lot of these things, we've just been able to keep kicking the can down the road. We're just now really getting to the point where the consumer is tapped out and either is unwilling to take on additional debt or the financial system is unwilling to provide that additional debt. And so this is where you're seeing the brakes come on pretty hard in a lot of areas of consumer spending. What's keeping it going though today is that you have roughly the top 10% of income earners are providing or are accounting, I should say, for half of consumer spending. I mean, that's incredibly lopsided.
The Treasury needs buyers for nearly $2 trillion in new issuance, and the private market clearly isn't absorbing it at these yields. If the Fed steps back in, aren't we admitting that the U.S. can no longer finance itself without monetary inflation?
Well, I think that's been the case, though, for several years now.
Yeah,
I mean, how on earth did we fund so much of the debt that we issued the last 4 or 5 years? We just paid for it with inflation. We stole 20%, more than 20%, of the value of everyone's dollars that existed in the entire world. That's how we paid for these trillions and trillions of dollars in spending that the government didn't have.